Monday, August the 15th, and not much has changed really ever since this significant candle where the market had took a decent size move lower, still waiting for the market to make lower lows, which hasn't happened, or confirm a nice breakout above the previous resistance. Again, that hasn't happened. What we're seeing is previous support on two different occasions become that of resistance. Once in here, the support is now resistance, and the previous resistance in here is now support again. If we take a look at this line that we have now along with this upward trend, this is more of an ascending triangle. Moving on now to the 6-hour or the quarter day chart. And we can see that ascending triangle a little bit better in here. There's the uptrend line and a major resistance level roughly at about $39.50, which happens to be where we are as of the time of this video. What you'd want to see happen on a bullish case is a breakout and have this level work out as support. But overall within this, I've been talking since in here how we've been testing this 5-day moving average. We've been testing it since the 19th of July, or pretty much a month now, where it's going above it, below it, above it, below it. Now it's trying to get above it again, not showing any clear direction as of yet within the trend. I guess it's a good time to be on summer vacation. Looking at the 3-day chart now, which gives you a close precipitation or close area to where the 50-day moving average happens to be located. Before on the way down, it was a descending triangle with this Fibonacci line being support. And really the 18-period average, or in this case, the 18-period average of closes being resistance. Now what's happening is this level is support. It's developed a resistance line here at the 42 handle. And it's looking now like it wants to come back and find this area as support and break higher, because you've had the move higher, which broke us away from this average. Now coming back to a newly rising 18-period average, and a breakout from this level would really have the momentum needed for this thing to really get going. The big concern here is that there is definitely going to be a failed move. The only question is what will be the fast move that will follow it through. And the failed move is either the break below this 50-day moving average, or 50-day moving average had the similar break, so within this average in itself, and then not reversing the trend either downwards or sideways, or this one breaking above this failed move and not reverting the trend back to the upside. So one of the two has to be a failed move. And speaking of a failed move, either the selling in the Dow Jones that occurred back in 2007, 2008 into 2009 will be the failed move, or the failure on the rally afterwards. After all, it's managed to get above this significant Fibonacci line, or any one that you may have found out. I think there was one roughly where I'm drawing that line in there. Either way, it is really showing that things are probably going to get very wild. Now, what's very concerning for me is how we've seen at the start of August the markets having the wild ride volatility, when markets, generally speaking, do not do so much in August, people on vacations. And I think the concern there is that this does seem that this might be a precursor for what is to come, meaning after Labor Day, maybe even a week after that, roughly about 4 weeks from today, will we see a pickup with more downward movement within the stock market, because the economy, of course, is in really bad shape. But just throwing out the fundamentals, looking at this on a technical analysis level, technically speaking, we've had this bad capitulation type sell-off. The analysis is that it's not normal, and it does make sense that these are early movements within it. As the markets have been going lower, gold and silver have either been going sideways or higher. Thus, if gold and silver happens to capitulate within the stock market indices, then the head start would be happening right now, meaning gold's at 1700 and change, silver's well over 35, and therefore, if we have maybe a small rally over the next 4 weeks on lower volatility and lower volume, then just maybe when things start to go lower, this will help gold and silver hold their own, because that would mean a move from gold from 1700 to maybe 1400. Silver might go from 36 to 24. And again, those moves may not even happen, period. But it is giving me a lot of concern that the stock market is selling off at the start of August. I do think that over the next a month or so, at least until the day after Labor Day, that things will really slow down, but then things will probably get wild after that time frame. And we'll finish this up with some a price memory on the silver market. This is the last time I put this image up. I might have put this on the blog. And what it does is it calculates how many times the highest point, the lowest point, or the closing point of a day closes within the range. The first range is from 20 and 21.99, and so on and so on. Each one is designed for a 10% move. Well, we were seeing here that this one from 35.40 to 30.39 was in the lead, and this downward motion, not much action within here. Well, things have changed, and today we have the 39 level, which is even with or pretty close to the ones in here, showing that the most silver has traded from is in the range from around 35.40 to 39. Thank you for tuning in today, and have yourself a great day.